Good morning. Ideally, the stream is set up properly this time. Yesterday, there was a little mishap. I don't know what happened, but it said that waiting for a stream, and then like shit all happened, right? So that's a little annoying. But we're back today. It is Wednesday, the September the 4th. We have a short week ahead of us. On Monday, it was Labor Day, so the markets were closed. The futures market half day, the stock market closed. And yesterday, we got a very, very frivolous dump in the equity market as big tech continued to sell off. So, Nvidia, one of the big losers, dropping about $260 billion of market cap in a single day. It was down 9.5% yesterday from the open to close. Very drastic move there. We're coming into a period, as I was talking about yesterday, but I guess there was no one to hear me. As I was talking about yesterday, we're coming into a period of very weak seasonality, meaning that September into November, typically we have bearish seasonality. We've seen a spike in VIX yesterday. Generally, we see rebalancing, right? End of quarter is coming up along with a Fed cut on September 18th. That could spark more volatility and movement. Typically, when we see a Fed pivot into the following months, markets do tend to die off to the downside. We have an election year as well. We're getting closer and closer to that election date. And seasonality, right? Kicking September off on, I guess, the right foot to the downside as these prices got shocked yesterday. So a very big drop all across the board. It wasn't crazy volume selling, but it was fairly significant as tech is just continuously struggling. So I think there could be a little more downside here as a seasonal weakness continues. And possibly some dip buyers coming into October, November. Right now, with the weakness in big tech, it's just very hard to look at this and be like, it's time to buy these dips right now. I do like areas, but I think at lower prices. So today is another day where we're very close on the NASDAQ and the S&P to some key areas where the buy side might come through. I'll talk about that in just a bit. But the S&P, I'm mainly targeting 54.80 and 54.35 on the futures to find some kind of more aggressive dip buyers in that regard. But the main topic of conversation today is crude oil, right? I've liked crude oil on many dips so far. I don't hate it necessarily, but I don't like this breakdown. We've traded a $60 mark for the first time in a very long time. I don't know, in June. In June it traded the 60 mark, but then it bounced back pretty aggressively. But we're seeing downside, right? It's wiped out all the gains of the year after dropping into $60 barrel range for the first time since, well, I guess like June, but like January more so. We've seen a lot more downside into that area. Ample inventories and the end of summer driving also put pressure on gasoline, which sunk to a near 3-year low. In the latest headlines from the energy sector, oil recently formed a lower high, suggesting potential retrace of some kind of descending trend line, some analysts said. But yeah, we're seeing a lot of downside here, and this is good for inflation realistically. As these crude prices drop, it's a big factor in the inflation figures. So as inflation gets subdued and these guys pull off, the Fed's going to be more eager to cut. So there were several catalysts this year that pushed crude below $70, where it traded for much of the year. Reports pointed to progress towards a deal that would resolve a dispute that has halted Libyan crude production and exports, as well as the likelihood that OPEC Plus will boost production next month. Commodities also fell broadly after Goldman Sachs warned that copper prices would suffer a sharp correction, prompting fears for the industrial bellwether that is used in EVs, right? Power transmission and AI data centers. Renewed growth inventories were also another large factor prompting the big moves. Those included concerns about the weak global demand, particularly as the top oil importer China, which hasn't been showing much signs of revival. Over in the US, new data prompted concerns about the economic slowdown. American manufacturing production decreased for the first time in 7 months in August, while the ISM manufacturing PMI contracted for the 5th month straight. So growth worries haven't been limited to the U.S. We saw that the real first trading day of September dropped down very aggressively. NASDAQ closing 3% to the downside following the Labor Day holiday. Leading losses, naturally, we looked at Nvidia, which recorded its largest one-day market cap drop in U.S. stock market history, given its massive size. Remember that September, like I said, historically weak month. The benchmark S&P did recently recover from the massive drop that transpired on August 4th, August 5th. And with a steady rebound over the last few weeks that saw it even end August in positive territory by just a smidge. You saw that like very lengthy doji that was created on the monthly. So we'll take a look at this. Generally speaking, like value names like Dow Jones, yeah, okay, it did drop off, but it did create a new high recently. The Nasdaq has been pulling off super aggressively. It's now trying to gap lower even after yesterday's Tuesday descent, Black Tuesday, right? So there could be a little more downside to potentially create a higher low, as we are in a current downtrend. S&P was just a few points shy off an all-time high, and it's a matter of big tech coming back to the playing field, right? Managers and funds are fairly underweight big tech. There's not a lot of buying in big tech, but I think that takes a turn in the coming weeks. I think that we need to shake off some of these late buyers because there were no real late buyers. Better buyers and bigger buyers are waiting and lurking for prices lower, which they're going to get active at. And I don't think that downside has fully come in, not full capitulation. So I can see a little more press to the downside in the coming days. And see kind of like a rotationary aspect, but overall leading to more of a bearish trend in the following few weeks / months, you could even say. So let's take a look at these futures and what's going on here. The S&P 500, pretty swift decline yesterday. We've just dropped through multiple different distributions to the downside. On the overnight, we're holding 55.08 right now. So that 55.08 that's holding is a distribution bottom. Realistically, it is hard to be bullish on this. It is hard to try to buy these dips. One of the main situations where buyers would be a little more happy would be above 55.25, or I should say 55.30 area. If they can catch a bit above that, I think that there is a little more upside, but it's going to be fairly limited towards that 55.63 area, 65 area, where I think that's the continuation to kind of lead these guys down, where you can see a potential little relief rally above into that area and then see that slow grind lower. Honestly, long side, I think bets are off under 55.0508, where that downside really opens up. And we're in a very interesting area because we're trading towards the bottom of a big balance. So I don't want to just like click the green button all the time as we're into the bottom of this big balance. I need to have more information in this market. So currently bearish, current auctions and balances are holding to the bear side. So it's higher probability that you sell some of these rallies. And I'll see kind of how that shapes up throughout the day, but leaning a little more bearish on higher prices or breaks of lower prices. So that's what I got going on for today. We'll do this again to wrap up the week. It is Wednesday, tomorrow Thursday, Friday, short week coming in fast, and then tomorrow we've got some jobs numbers, but we got the main non-farm payroll numbers, which are coming out on Friday pre-market, which are going to be another potential decent size mover, because all these job figures that have come over the last few weeks, I remember that like massive revision has had an impact on the market, so I think a lot of eyes are going to be on that. So let's open up our room here. I'll see you guys on the other side, and we'll do this again tomorrow. So happy trading, have a great day. Slow and steady, and then we'll see how this thing transpires, and I'll update you guys tomorrow, and I'll see you guys on